Good evening, welcome to another episode of the Trading Edge. It is Wednesday, hump day, broke the back of another week. Hopefully your trading's been going well this week. Had a couple of losers today. I was still in the Aussie dollar, took a little loss on the pound dollar, and on the pound Aussie, little bit of a bigger loss on that one. But a few things setting up. The markets are starting to come to life a bit now. So hopefully the final quarter of the year is going to be a good one. We've got a couple of trades that I want to share with you in opposite directions. So I'm going to be looking at the Aussie CAD and the dollar yen, and they're both very, very similar situations. And what I mean by that is they're both directional. So there's going to be a trend continuation opportunity, but there's also going to be a counter trend opportunity or a structure-based trade, bullish and bearish on both of those pairs. So depending on what type of trader you are and what you're looking for, there could be an opportunity for you. But what I like about these situations is the ability to adapt, having a trade plan that allows you to adapt in certain situations. So first of all, you guys probably know that I only take counter trend trades at certain levels in the market. So there's certain numbers I pay attention to in the markets, and there's certain extreme, or if it's not certain numbers, it's extreme highs and lows that I pay attention to, where I can actually look for counter moves. One in, one out trades, that's all I go for. But the two trades I'm going to share with you, there's a trend continuation, a final trend continuation stretch that I'm going to look for on both of them, and then a counter move as well. So I could get one or the other or both. So let's take a look at the first one. The first one is going to be the Aussie CAD. This is the daily time frame here, and you can very clearly see that we're in a bearish trend. We've been putting in new lows, new lows, new lows, new lows. And where we're at, if we just put a horizontal line in where market's trading at the moment, bearing in mind we've got this 9100 even handle right here as well. 9200 is a good level in this market as well. But we're trading at 9141. And if we just scroll back here and have a look at previous structure, the most recent previous low is right at that level. We respected that level. In fact, we didn't close below 9170. So we're approaching that level now. Now we are in a bearish trend. RSI is pushing right down. We're almost oversold here at 21. Technically oversold, just not by my filters. But we're pushing down to that level. So we've identified a bearish trend. We've predicted where market's likely to go. I'm not happy that market's going to push beyond this point without a rally, right? We've had this big bullish momentum, strong move down. And we all know that we have nothing lasts forever, right? Whenever we have these long moves, these big bearish moves, I said bullish just now, I think bearish moves, we're likely to see a pullback. So the question then becomes, well, what type of trader are you? Are you looking to catch the pullback, or are you waiting for a pullback and continuing on with that trend continuation move? Now, if you're a trend following trader, it might be a bit different, because obviously we don't have much room to move. So if you're a trend following trader, expecting targets to be down here somewhere is, a little bit silly. I wouldn't expect the market to push down and shoot for extended move just based on the support level that we're at. However, as a trend continuation trader, you could look for that final push up into previous structure support, become resistance, and then look to catch that final push down, which we all know usually becomes a double bottom. If we do see a relief or a rotation, potential rotation, we see more double bottoms at these levels than we don't. That's why double bottoms is a strategy or is an entry, or that's why people trade these V bottoms or V tops, because they happen frequently. So could be a double bottom, but it's also a trend continuation target. So this is a very rare situation where I'll actually be looking for a pullback, and I'll be looking for the first chance entry around here. I'll be looking for a pullback I'll be looking for a trend continuation move, and I'll be looking for a counter trend move. Now let me tell you how I'll handle the counter move. If we pull back up into this level, and we test previous structure support, becomes resistance, then we get the trend continuation move. Because we've pushed up into structure, what I'll need then is a 2618. I won't be trading a double bottom entry. However, if we push down and we put in a double bottom down here that's valid, then I can take the double bottom. And I won't be looking for a trend continuation because we've retested the lows. So lots of different approaches. I'm assessing the market, I'm reading the price, and I'm seeing what it's telling me. And I've got a trading strategy for each situation, which provides, puts me on the right side of the market. So just wait and see what happens. Now, if we do get a pullback, what I'll be looking for is a trend continuation move. Now I can drop down the time frames and I can start to look for earlier entries so I don't miss out on the move. And I'm going to go straight. You can see we've had a little lower low, lower close here, lower low, lower close here. In fact, if you're looking on the 4 hour, right, and we get a pull back up into this zone, this is essentially the kill zone. I'm going to drop down to the 60 to show you this because it's a little bit clearer. But this is the kill zone, right? So we've had the lower low, lower close. We've had the outside return. We've had the lower low, lower close. So if we then pull back into this zone, this is where I'm going to be looking for that Graystone trend continuation entry with a 1-to-1 risk reward. It's going to look something like this. Obviously, I can't draw this out accurately just yet, but we're going to need to push right back up in. Hang on, I've got that target all wrong. What is it? A 20 pip, 48, 58. Yeah, got that target slightly wrong there. So the kill zone is going to be something like this. Again, I can't draw it out perfect at the moment because we don't know if we're just going to continue down. But if we get a pullback, I'll be looking at this zone here, with this being our risk. Let's colour this in red. Nice coffee. Drop down to 2 coffees a day, so I'm really, really enjoying this one. So we've got our risk above the highs. Again, we can't draw it out accurately yet, but it's going to look something like this roughly if we get the pullback. However, if we don't get the pullback and we get a valid double bottom, you can see this real nice pin bar here, whatever you like to call it, low test candle wick, that's what I call it. RSI is massively oversold. If we get a little retest of structure here and we get equal tests of the low and we get a valid double bottom, I'll be paying attention to the RSI. Do we get bullish divergence? If yes, I can enter this. Simple as that. I'll enter this as a counter move. Where will I be looking for targets? Right here. Okay, so if we put in the double bottom before we put in the trend continuation move, this is one of those scenarios where I can actually take either or depending on what I get presented with. And it's a rare situation, but a very nice risk reward, and it will be a 1 in 1 out as well for that as well. Okay, so that's what I'm looking at on the AUDCAD. Right, I'll be keeping my eye on this until I go to bed. I'll be monitoring this first thing in the morning for the live room as well. And the next trade that I want to share with you is the dollar yen, and it's in the exact opposite direction. So this is a bullish example, right? Look where we're going, right? We've got this big bullish momentum candle at the moment, some bullish momentum. Right above that, we got 114.50. Now 114.50 is a very well-respected level in this market. So are most of the 50s in this market. And if we just zoom out again, look at this. Look at this. Really, really nice. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right? So really, really nice area of structure resistance. So if you think about our AUDCAD example, we're looking for a trend continuation for that final test, which could produce a retest or a double top, Or if we push straight up and we get a valid double top, we can enter the counter move. So let's see how we can enter this, right? RSI is already pushing over bought. Let's drop down to the trading time frame. You're going to see this is the 4 hour. Let's get rid of some of these zones. I was hesitant to buy the dip here, purely how price was reacting at this level. We ended up pushing up, and there was a nice descending channel here as well. So if you caught that, well done. But essentially what we're looking at is new high, outside return, new high, and if we get a pullback, down to this zone, the kill zone, just like the Aussie CAD, but it's in the opposite direction. So if we just zoom in here, you're going to see that stops need to go below the low. So I think it's about a 20 pip stop again, 23 maybe. Yeah, 23 pips. So we're going to be 23 below the low. It's going to put us down at 30. Right, then we want to monitor our 1-to-1. We don't know where this is going to end yet. So again, we can't be as accurate as we'd like to be. This is why I'm tracking it. And I'm going to be keeping my eye on this into the night, you know, before I go to bed and when I get up first thing in the morning. And when I say I track, you know, I'm keeping my eye on it before I go to bed and first thing in the morning, you know, you don't want to stress about this stuff. There's always going to be more opportunities. There will always be opportunities. Okay. And one thing I do like to do is I like to see what's playing out, what's likely to play out. This is why I think it's really important to understand how to read price. Because say, for instance, you just traded advanced patterns. Well, when you go live, and you're probably not going to really understand this until you trade full time, and this is your full time thing. When you're just trading patterns, you become uncomfortable with. You feel like you should be looking at all the markets all the time. You feel like you should have your eyes on the markets all the time. Especially that I get traders tell me that they trade off the hourly charts. They only trade advanced patterns, and they feel like they're going to miss out. They're looking at all the charts all the time, and then when they go out, they don't feel comfortable. When they go on holiday, they don't feel comfortable. And what I like, or what I tell them is, if you can understand how to read price, this is why it's fundamental, right? Because if you understand how to read price, you build discretion, and you know how markets react. You know how price behaves. You know levels that it respects. And what that means is, say you're looking at 8 markets and you just trade patterns. Well, there might be 2 of those markets might have to break through a really, really strong level of support or resistance to get to the completion point of the pattern. Therefore, it's not really worth looking at, keeping your eye on. Another pair might be, it might be having a descending channel just before the completion point, and it's not really likely to set up because you're likely to see a relief, where you can put that to one side as well. Another pattern might be pushing up past the you know, it's putting the C leg and you're waiting for the D leg to complete, but it's you know, it's consolidating, or it's putting in a few doji candles, and you think, oh, that's not really gonna, you know, I can leave that one for a while as well. And you might whittle it down to, you know, on the flip side, one might be pushing up to a D point and putting in a little flag pattern, and you think, well, this could break out quite quickly and form that D completion quite quickly. So you put that to the right hand side and you say, right, I need to keep my eye on that one. And what you do by understanding how to read price is it keeps you calm from having to check all those markets, even if you're just trading patterns, because you're now looking at 2 pairs instead of 8. So I really recommend that you do understand the fundamentals of reading price. It will pay dividends in the long run. And that's why I'm able to adapt and trade situations like this, because I've got a way of attacking this depending on what we do. So if we push up and then pull down into previous resistance, become support, and then retest, then I'm not looking at it as a double top. I'll look for a 26.18. If we put in a double top without pushing down into structure, I'll take the double top. If we push down here and get a trend continuation, then I can take a trend continuation. So there's all different ways that I can attack this market, and it's all through reading price and what's likely to happen next based off reading price. So very, very important. It's so powerful. It's probably the most powerful thing you're going to learn in trading. No indicators, just naked price. So continuing on with this then, we're looking for a pullback down into this zone. The risk will look something like this. Risk will look something like this. This will be the kill zone. If we drop down to the 60, it's going to look pretty much the same. Okay, so yeah, is what it is. If we do happen to put in a double top, you can see price actions, the RSI is massively overbought here, 92 nearly. If we put in a double top at this level, right, then I'll absolutely be looking to sell this off. The target on this one will be just down here at this level, this structure shelf looking left. This was the shelf that had some indecision, so I wouldn't feel comfortable shooting beyond that. And by the way, those of you who were looking at that descending channel earlier, that was in here. We had the bullish divergence on the RSI. So yeah, I'll be looking at, whoops, this should be green. So I'll be looking at this. Where's the green gone? There you are. And my risk will be, you know, the ATR above the double top, wherever that happens to be. So a couple of really, really nice opportunities there. And it's just a case of keeping your eye out. You know, these, sometimes you miss these and it's a pain. It really is a pain. But is what it is. There'll be plenty more opportunities to come. The Aussie dollar, I'm hoping we can push down and just take out my targets. We came about 11 pips. We came 8 pips away from it earlier. It's got about 150, I think about 140 pips, 150 pip move on this. This was the longer term based off the dailies. So hopefully we can push down and hit targets on this before the weekend would be nice. And anything else updates, I will post into the chat, the trader chat. I've had a couple of wedge patterns as well. Still got one to break out, but one looks like it's just broken out on the pound Aussie. If you're looking for a pullback and an aggressive buy. Yeah, so I'm probably going to share this one on YouTube as well. If you're watching this on YouTube, this is what we do every day. This is a Trading Edge video myself and Akil release every single day for our platform members, and then they come in to the live room every day, Tuesday, Wednesday and Thursday, and see this stuff live. They see us take the trades. We took 3 trades this morning, and they see the whole process throughout the whole portfolio, and that transparency really gives that true belief transference and education for traders. So if you feel like coming in, links below. The little trial, it's risk-free, no auto charges. We just want to give you transparency. We want you to see what it's like before, you know, get your toe wet, not even your foot. So check it out. I'll see you in there. And until tomorrow, take care. Have a great rest of your day, and I'll see you then.